Welcome, dear traders. It's me, Kate Stichen, and you are watching a recap of the Asian session on October 6. Asia's major stock indexes are bracing to end this week with substantial losses. Japanese and antibody stocks sold off as the global bond yields soared. However, the Australian indicator rose slightly today. Meanwhile, the US futures and Japan's Nikkei are trading in the red. Today, markets are focused on the US Nonfarm Payrolls report. This release will likely influence the Federal Reserve's next policy steps. The Nonfarm Payrolls report will be released against the backdrop of a bunch of robust economic indicators. As a result, both the US currency and treasuries have grown significantly this week. It has been the case since the US statistics were strong and the regulator officials' hawkish comments were hawkish. These factors have been supporting the Fed's higher for longer vision for a long time. The most important report on the labor market for September will help understand whether the regulator's hawkish stance needs to be adjusted. So far, the US dollar has been sensitive to the US economic data. Therefore, there is no doubt that the Nonfarm Payrolls release will have an impact on the US national currency as well as on the US Treasury yields. This week's sales of US Treasuries broke multi-year records. This led to an increase in the yields. Holders of long-term US debt continued to demand higher yields against increasing issuance. After all, they are token on part of the US debt. For example, the yearly yield chart of long-term 10-year treasuries has risen over the last 24 hours to its high of 4.8%. Following rising yields, the greenback has also strengthened this week. Although the US dollar index was trading slightly below the weekly highs at the beginning of the Asian session, and the prospects of the US dollar are still optimistic. Over the last two sessions, the greenback has lost nearly 1%. In anticipation of the Nonfarm Payrolls, the US dollar index is consolidating within the range of 106.30 and 106.60. In the Asian session, it fell to 106.50. If tensions in the US labor market persist, high Nonfarm payrolls may trigger the US dollar's growth and the high volatility in government bonds. A pause in the dollar's rally gave the Japanese pair a much-needed respite. The yen's sharp 2% decline sparked speculation about Japan's intervention in the currency market. Japanese Finance Minister Shunichi Suzuki refused to comment on whether Japan had intervened in the forex market. The latest financial reports from the Japanese regulator on foreign exchange reserves showed that there were no yen buying operations, and most likely the banks, which usually intervene, responded to the regulator's rate control with a massive sell-off of the pair. So far, the Japanese authorities have been more concerned about the excessive volatility of the yen, meaning sharp jumps in its exchange rate over a day or a week. However, Vice Minister of Finance Masato Kanda said that the yen's persistent weakness could also be a reason for Japan to intervene in the foreign exchange market. Revised by the Japanese authorities, the intervention is likely to only slow the yen's decline, failing to cancel it. Nevertheless, even with the finance minister's refusal to comment on the intervention on the yen, closed Friday's Asian session slightly lower, near 148.90. However, the dollar-yen pair's trading range of 148.30 and 149.00 is still in favor of a stronger US dollar. Meanwhile, Japan's US dollar-denominated reserves continued to shrink at the end of September. The position of the antipodium currencies was negatively affected by the increase in the Treasury yields and the strengthening of the US dollar, expectations of a strong non-farm payrolls, and as a result, higher US Fed rates continued to weigh on the Australian and the New Zealand currencies. The Australian dollar consolidated within a narrow daily range of 0.6354 and 0.6383 early Friday. Notably, the Reserve Bank of Australia held its meeting on Tuesday and decided to keep the interest rate unchanged, and this was the fourth consecutive month that the bank has kept rate hikes on a pause. Against this backdrop, the Aussie declined by more than 1% at the end of this week. On a Friday, the Australian dollar was in the red, trading near 0.6366 at the end of the Asian session. The New Zealand dollar had even less strength to resist the almighty greenback this week. The Reserve Bank of New Zealand followed its Australian counterpart and kept interest rates on a hold. In addition, the statements of financial policymakers were even less aggressive than expected. As a result, the Kiwi slumped to the weekly lows, trading down in the range of 0.5950 and 0.5971 on Friday. The New Zealand dollar closed Friday's Asian session with a decline to 0.5960, losing about 0.6% against the US dollar at the end of the trading week. The Reserve Bank of India also held its meeting today and left the interest rate at 6.5% for the fourth time in a row. As a result, the rupee lost its growth momentum, reaching the area of 83.20 against the US dollar during Asian trading on a Friday. Over the week, the dollar-rupee pair has risen slightly within the narrow range of 0.83.10 and 83.00. Against the euro, the Indian currency surged within the range of 87.00 and 87.80 this week. Leave your comments below and don't miss our next video review. Remember that staying up to date is the key to success in your trading. See you online soon.